Hi, everyone. It's Tim and Dustin here, 11:15 on Thursday, November 6th. Markets are selling off a little bit here this morning. Few reasons, the earnings have been strong. Fed easing for the first part of December is in question now. If they, we still believe that, the Fed is still in an easing pattern, but the market's on pause on that now. So we're seeing a little bit of a sell-off.
Yeah, one of the real, I think, good signs with the market sell-off today is that and yesterday is that the bond market's responding. The bond market's up today. The 10-year settled down a little bit. We're about 4.08 on the 10-year. Yeah, 4.089, and that's a good sign. As long as we're in a period where safety assets are rallying as risk assets are selling off, that's healthy. And as Tim mentioned, we are, in this period where, we have supportive monetary policy and strong earnings is providing some tailwind to the markets, and the extreme valuations and maybe some of the political and fiscal uncertainty. The shutdown's causing a little bit of uncertainty. It's creating some temporary headwinds. So this volatility is probably going to continue, but we still favor risk assets, albeit cautious. The yield curve, as Tim mentions a lot, we follow that. As long as the Fed keeps cutting, it looks like they're probably going to cut 3 more times between now and the end of next year. That's kind of the base case. That'll bring the short end down. We've been a little bit concerned with this U-shaped yield curve, which doesn't happen very often. That could be problematic. But as long as the Fed keeps cutting rates, we think the yield curve will continue to normalize, and that's really, really positive for the economy. So overall, we remain constructive, but as we mentioned before, cautious as valuations are pretty high. So hope everybody has a great day, and as always, feel free to give us a call and we could talk in much greater detail. Thanks so much.
Thank you.